Okay, this is Set the Bar on Put You On Notice podcast. Y'all know who it is, man. It's the boy, Mr. Watch It What? Watch It Tone. You know I'm kicking in with the boy, Mr. B, also known as Barney Moore. And today we're honored to be joined by my guy Alejandro, and we also got the owner of this beautiful establishment here, Mr. Doug. How y'all doing, fellas?
Great. How you doing today?
We good,
Great
man.
to be here.
Today, man, we're gonna jump into a conversation about cryptocurrency. And you know, we got my boy Alejandro. He's also a podcaster himself. He has a podcast called The Economics of Everything. So before we jump into it, I want you to put us on notice about the Economics of Everything podcast.
Sure. So the Economics of Everything takes a simple approach to a ton of complex problems. So economics at its common core is the study of decision making, and everybody is a decision maker.
Right.
So ultimately what we look to do is break down complex topics and theories to make them into bite-sized chunks for people to understand. Because economics, it turns away a lot of people from just how complex and esoteric some of the terminology can be. So that's what we look to aim to do.
Okay, that's what's up. That's
great.
what's up. Yeah.
Spot on.
How long have you been doing this?
So we've been doing this since April of 2020. So about almost a year now, getting there.
Okay, that's what's up. So today, Alejandro's gonna, put us on notice about cryptocurrency as well. It's a lot going on in this market right now, and I don't know shit when it comes to it. I don't know nothing. Okay, so
Let me tell you, it was an exciting week.
it was exciting.
You got to see new people, new retailers,
Yep.
jump into the market.
Okay.
And there was terms that people never heard before when it comes to short selling, pump and dump.
Yep.
The short squeezing. So these are all, new terms for some people, maybe old terms for other people.
Right.
But it was just exciting, just the involvement and groups of people jumping into the market.
Okay.
So,
And I think it was a fun time to watch. Like you say, it was entertaining TV, better than anything
Yes.
I've watched in a long time.
So I guess we should start with what is cryptocurrency.
Okay.
Sure.
No,
Go ahead.
You're the specialist, buddy.
Thank you. I don't want to discount your knowledge. You have a lot more knowledge than the average folks. So I'll try and break it down. So cryptocurrency, essentially at its core, was invented by some unknown internet forum guy known as Satoshi Nakamoto. And what he created was something called Bitcoin. And what Bitcoin aimed to do was essentially take out the central planning focus of currencies. So what I mean by that is the dollar, for instance, is controlled by the Federal Reserve, which is the central bank in America. So they control, basically the price of inflation, which is year in and year out the price of the dollar and how much the dollar can buy. And what cryptocurrencies are hoping to do is take that part out of the equation and say, we value, as the people, what the currency should be across the globe.
But how do they come up with that number, I guess? I feel like it's just money coming out of nowhere. You know what I'm saying? Like what? Like
that's the Fed right now. They're pumping
okay.
money out of nowhere. That's what they do. It's my understanding is obviously we have central money supply, central banks, and with cryptocurrency they just decentralized it.
Yes.
Right.
And I don't understand the whole data mining processes other than if you're like some cave in Iceland and with about 2,000 servers, maybe you understand it that way. But I have no clue actually how they come up with it.
Okay.
Well, and two, one of the things he had said was that's really important is that our monetary system is based on something. So there is a physical aspect to all the money that's in America. So from paper dollars, if you drop a 50 and we light it on fire, what happens to that $50?
It's gone.
We don't have that issue with cryptocurrency.
Right. And that's weird to me though, because if you say in the Federal Reserve, pretty much decides the value of a dollar, who's deciding the value of cryptocurrency? You know what I mean?
Well, that's I think in the hands of the beholders. Ultimately, the cryptocurrency, as we can see from recent spikes, is controlled by the volume of money poured into it. Now that becomes scary for a couple different reasons. If somebody were to say, "Hey, I have a couple $1 million in cryptocurrency, that's going to be a huge, and I want to pull out from crypto or from Bitcoin, that's going to be a huge shock to that currency.
Right.
So it's a at the same time, it's a very interesting and cool thought for people to be able to value currencies on their own without a central bank. But at the same time, it's also scary for big-time investors if they were ever to want to pull out their money. So
Okay.
I think it holds in the eyes of the beholder, for Bitcoin at least. I'm not too informed on the other cryptocurrencies. I'm a little bit
Okay,
informed
because I was
on
going to ask, because there's quite a few of them. Like,
Right.
Was it Litcoin? I don't know that's
yeah.
how you really say it. Is it Litcoin?
Litcoin.
Yeah.
Oh, Litcoin.
Dogecoin.
Ethereum.
It's lit.
Ethereum, yeah.
That's
I guess
what
my
you made
understanding
up.
with Bitcoin is, and their like supply, when they first started, they only put out 21 million Bitcoins.
Yes.
And I don't know what they have, what they dispersed so far.
Mm-hmm.
But with the other ones that you just mentioned, it's unlimited supply, or they keep on producing them. So that's why the value of those currently are a lot lower than Bitcoin. And obviously, Bitcoin's the Coca-Cola
Yes.
of cryptocurrency. They're like
That's a good analogy.
So.
So,
I have a question for Alejandro. Is like, how do you buy and sell it though? Like,
Hey,
how
that's-
do I get some of it? How do you sell it to me? That's what I was wondering if you maybe could give us a little bit of background on that.
Yeah, definitely. So I think it is sold on exchanges. So Coinbase is, I think, the biggest one. Blockchain, I think, is really developed into, kind of the overall general ledger of sorts
Okay.
for Bitcoin, because what blockchain offers is immutable transactions. So you can't overwrite what is being done in real time. Every single transaction that happens is there and is there for good. There's no erasing. There's just only pen, no erasing. So where this is traded is, like I said, different platforms like Coinbase, Robinhood, I think has a cryptocurrency arm now, and even some bigger names I think are stepping into the game as well. But it's interesting because there's not just one direct exchange like the NYSE for
Right.
equities.
Yep.
That you can exchange it on, and it's also a 24/7 market.
Oh, okay.
So
That makes
I
it
mean,
unique, too.
yeah. So
Okay.
you don't get the separation of U.S. market versus Asian markets versus European markets. It's 24/7. So you go to bed and Europe wakes up and there's like, hey, we're pulling out a Bitcoin today.
right, right.
You don't have unless you have alerts on.
Right,
you
right.
kind of like have.
So that makes it more dangerous to.
In a
Increases
way,
the risk. Let's say
Yeah,
that's
increases the
danger.
risk.
Yeah.
Yes.
Okay. And go ahead, bro.
I have a question, and I'm sorry, just for everybody, because like I understand it fairly well, but not as well as you do because it's not something I focus on. But I want to ask you, like, what can you use a Bitcoin for? Tell people what can you use it for?
Definitely. So it doesn't have a whole load of following like the U.S. dollar does. Obviously, that's been ingrained into American society for hundreds of years.
Oh yeah.
But there are establishments, local restaurants. I think I heard even like an apartment complex in New York, and a school in New York.
Okay.
There are organizations and companies that do accept Bitcoin as a form of payment or as a form of currency. Now, when you break it down, if you accept Bitcoin as a form of currency, then it really starts to negate the effects the dollar has, because the power of the dollar is you can exchange goods and services for this paper.
Right.
And now for since we've getting into debit and credit cards, now for just like dollars or numbers essentially
Right.
from one account to another account.
Right. What's your feeling? Obviously, back in '71, we got rid of the gold standard, and we had the backing, obviously, fiat money, backing of the government. With obviously the popularity of cryptocurrency, do you see a future that our government is actually going to get into the cryptocurrency business, where they're going to have their own, or they're actually going to start regulating crypto, like Bitcoin and the other ones?
So this is a thought I've had for a couple of years now. I mean, I can't remember the last time that I had all of my net worth or any significant amount of dollars in cash, cold hard cash.
Right.
So, I'm not going to make a strong argument of this because I think there's a couple of holes in the argument, but I would say we are in a digital age right now that we are forming our own cryptocurrency of sorts. The U.S. dollar is becoming digitally native, sitting in accounts from all across the nation, and it's going from account to account without ever being taken out as cold hard cash.
Okay.
But I'm gonna go back to what Barney said. Just sorry to cut you off, but like, what can you buy with Bitcoin, or what can you know what I'm saying? Like, I can't go to the grocery store and use my Bitcoin money. Like, how can I use it?
That's great.
You know what I mean? Like,
You went to Metro Market. And
yeah, you know what I'm saying? Like,
groceries there, like,
hey, y'all take Bitcoin?
Security.
No, I think it's not formally accepted by a lot of establishments for good reason. It fluctuates in price. By the time of the from beginning of sale of your bananas and your fruits and vegetables and meats to the end of the sale, it could have moved a whole big amount.
Right.
So I think there needs to be some sort of overall This kind of gets into why cryptocurrency started as a whole, was to decentralize the planning of it. But I think there needs to be some sort of authority or regulation into cryptocurrencies if it ever were to be accepted as a form of payment.
Okay.
And so one of the things that I sort of brought up, but you expanded on with fiat money, is like the danger with that is that so now when they decentralized our money and stopped having it be backed on gold, the danger is, and you mentioned earlier, is that they'll just keep printing it.
Yeah.
Because there is no standard to it, there's no basis, and so cash money eventually at some point could be worthless.
Yeah.
Just because it's printed with no rhyme or reason.
Right.
It's like, hey, we need to put more money into the economy.
Right.
Start the presses.
Right.
Yep.
And so that's going to be where Bitcoin sort of removes that risk a little bit as well. However, my issue with Bitcoin is that it's like a baseball card. It's only worth as much as someone puts a price on it.
Okay.
And so that concerns me a little bit as an investment manager. It concerns me because I don't have anything to base my recommendations on.
Right.
But
Right.
it is the wave of the future. So it's get on the train or get left behind.
And I guess what I'm scared of, where you see obviously the printing of a lot of money and devalue of the dollar. Are we going to go back to gold or cryptocurrency?
Huh.
I mean, with gold, it's obviously something physical. I mean, if you buy oil, it's something you
Right,
can have.
right.
You can trade. You can trade a service for it. Wheat, soybeans.
Right.
Yep.
With cryptocurrency, it's like, what is it?
Right.
Where is it?
That's
It's
what
just
I'm
flowing
saying.
up there, and I don't know. And I guess the unknown is like, and again, kind of what Barney said, it's,
So
what you value that,
Right.
and that's it.
So
So,
going away from the gold standard, and Barney help me out here. So we went to more of a reserve-based system.
Yeah.
So for every dollar out in the market and loaned out, where money originates, we had a reserve, so one for one exchange. Now that has not been true for quite some time.
Long time, yeah. And when I said it originally, it was to sort of simplify the discussion, but I didn't want to get too into it because once you start talking about fiat money, but luckily he said it out loud. So that I could say it. It was like, it was, I'm sorry, I didn't mean to cut you off, but definitely we had to switch from that at some point.
Right. So if we start to look at that one-for-one exchange of money out in the market versus money in reserves, we can start to exchange the $1 for $1 in the market to $1 for $1 in reserves for cryptocurrencies, $1 for $1 in the market for $1 for $1 in reserves. Because at some point, somebody's going to be holding Bitcoin
Right.
yes.
anywhere in the world.
That's true.
So I think the free market does a good job of making sure that there's a lower level and an upper level, not letting it get too low or not letting it get too high.
Okay.
So when I was saying regulation or authority, and this is kind of like a stream of consciousness at this point, but I think the free market could essentially do that without any regulations or anybody having the ultimate say in it.
Right.
I think you're right. The problem is always going to be regulation.
Yeah.
And if you've been an American your whole life, we like regulations.
Uh-huh.
So,
Yes.
and I think one of the hurdles Bitcoin has, and they're going to continue to have, is until we find out who exactly is that pseudonym, the inventor of Bitcoin, the founder of Bitcoin. Who is this person? Who is this company? That mystery is always going to be a little bit of a problem to getting it widely accepted.
It's ran by the mob.
Yeah.
It's ran by the mob. Let's just, hey, that's all I'm saying. Where is this coming from?
If there are any mobsters watching this, he speaks for himself.
Hey, I call it like a TIE is. But no, I don't know if you guys seen also coming up, Harriet Tubman's about to be on the, what, $20?
I believe it's a $20 bill.
$20 bill.
Yep.
Yeah, Harriet Tubman, yeah.
Right, you know?
Yeah,
That's amazing.
Right, but like, so is cryptocurrency the future or the now? Or what's your thoughts on that?
Before he answers, I'm going to tell you, I believe it is the future.
Okay.
And this is, you're talking to someone, I'm in the old school brick and mortar. Clients come in, they talk to us, we assess their situation. We move money via banks back and forth. I can't see that staying this way forever. I can't see that being the wave of the future. I think whether I'm comfortable with it or not, Bitcoin has got to be a part of my education moving forward because it is going to be a bigger and bigger part of our economy as the years go on.
But would it be? I'll let you guys answer it first, and then.
I mean, personally, I agree with you. I think it's the future. I think it needs to be more accessible to the end user,
I agree.
and where I have a bunch of Bitcoin or Dogecoin or whatever it is, and it comes up on my phone, I'm able to just like go to the grocery store, scan it, and pay for it that way.
Right.
I guess when I see a platform like that, that's when I'll really start believing in it itself.
Makes sense. Makes sense.
Yeah, I think our great leaders in the free market right now and in the U.S. economy, Elon Musk, Jeff Bezos, I mean, the free thinkers that are out there, they're a huge proponent and commentator on Bitcoin. So I think if they start to continue to push that dial, it's going to get enough traction for where it's going to start to become more and more accepted and more intertwined in society.
And the thing is with that, with it being digital, there's a lot of fear in that.
Yes.
You can't control what you can't see. You know what I mean? So it's like, I feel like that's going to be the biggest issue and why the value of the dollar will never necessarily die.
Right, and that's it's a theory in economics called asymmetric information. And it's basically, I mean, what it just sounds like, it's like there's not enough information held by all parties involved where you can truly pinpoint, what the truth of source of information is. So, this has been done for I'm sure you, Barney, you can attest to this, for years on the equity markets, where until like the early 60s or 70s, equity pricings weren't known intraday. They're only known after day. So they were published in the newspaper, and if you woke up one morning and realized, oh wow, like I'm super up, or oh crap, I'm super down, that's when you then called and made that adjustment to your account. Bitcoin, if it gets into that asymmetric information, just like we were back in the 60s and 70s, runs a risk of people not being able to liquidate their cash that they have in Bitcoin, because it still is pegged to the dollar at this point, and also pull out the returns. So I think your concern of being digital and not being able to pinpoint it every single second of the day is valid. So we, as a society or as programmers in Bitcoin, we need to do better to assure that's never a problem.
Okay.
I guess my question, obviously we have, a younger clientele watching this. How much of your portfolio would you want to invest into cryptocurrency?
I'll be honest with you, I'm going to give you an honest opinion. So, me personally, I keep it as a speculative investment, and so I keep it at a very low percentile in my portfolios. Of the 82 million or whatever that I manage, I would say less than $1 million is in Bitcoin.
Okay.
And the only reason is because I have yet to get my hands around it.
Okay.
And so until I do, I don't refer it to my clients. But some of our younger partners, junior partners, they're heavy into it.
Yeah.
And I think that, I believe it is like I was saying earlier, I'm educating myself on it more and more. That's why I was really excited about this show today, because it is the wave of the future. I am going to have to figure out how to integrate it into my clients' portfolios, but I think that we really are at this point where I just need a better grasp of what it's based on what affects the price fluctuations, things of that nature. I can foresee your account going down depending on what the market's going on.
Right.
I cannot do that yet with Bitcoin. So that's the reason that I'm a little hesitant, and I might be behind, but I also feel that moving forward, I'll be talking to Alejandro a lot more,
Right.
and I will be able to actually expand a little bit about what I'm doing and what I can offer my clients. You know, so I think you're going to look to, you know, if you're going to have some speculative stuff in your portfolio, I would recommend at this point keeping it under 10% until you have a better personal understanding about
Right.
it.
All right.
And there's not a bad thing with taking a gamble because, you know, this is the industry of gambling.
Right,
Yes.
right.
You make some bets sometimes that work and sometimes they don't.
Right.
Yeah,
But, you
look
know,
at GameStop this week.
Yeah.
Yeah.
Oh,
Yeah.
and
We'll
get to GameStop.
We'll definitely get into that. We'll definitely get into that. But no, so it sounds like, you know, in conclusion, you guys all think cryptocurrency is, you know, gonna be the future. It's something that we can
Yes.
all
Yes.
profit from, which I didn't necessarily ask, like, how do you profit from it? Like,
Just like any stock, you buy it at a certain price and sell it at a different price.
Okay.
That's going to be, you know, I mean, just the basics.
so you have to always be tuned in, pretty much, right?
Yeah,
I mean, because you said it's open
It's a
24
24-hour
hours.
market.
Yeah.
24/7. Yeah.
You know,
Okay.
and that's why I always say that's one thing I always would caution all the people watching this as on a personal level, you know, that when the Japanese markets are open, you might be in bed. So if the cryptocurrency price changes during that time, there are, like you were saying, you could wake up and be like, oh my goodness. So at some point, I would assume there's going to be programs, there's going to be technology that's going to allow you to monitor, set, buy, sell prices, things like that, just like the stuff I use.
Right.
So yeah, I mean, a big part of my business is after hours selling. So there's going to be a program that's created to do that with cryptocurrencies
Right.
as well.
I have, one more question. Obviously, there's new hedge funds are coming out and actually investing into different kind of cryptocurrencies. I think there's a company out east, I can't remember the name. I think got like over $300 million worth of VC money.
Yep.
Do you see, investing in those companies as well?
That's what I was going to
Those
say.
funds?
That would be your option if you're going to get into there. I would say that would be what you want to do, is do it with a company who's managing it for you.
All right.
You know, and in that case, a hedge fund is going to be a good opportunity.
Okay.
For you. Yeah.
How do you get in contact with a hedge fund? Because, you know, y'all brought that up several times.
Yeah.
You know, I just, I don't know. Like, I don't know. So,
It's easier said than done. I will say this: hedge funds they appear somewhat secretive, but they're not.
Okay.
It's really someone. If you're working with an advisor, you should just ask them how to get in contact with them. There is a high buy-in with a lot of them, so that is one of the.
I ain't got it.
You know, I have clients who are in hedge funds, but of course they don't invest their own money. They have someone else do it.
Okay.
But the buy-in is high, and so but you can get, some of them are going to ask you for a minimum of 50 to 100,000. Some are going to ask you for even more.
Sheesh.
Some are also going to ask you for a minimum of 5,000 to 10. So it all depends on the size of the hedge fund that you're
Okay.
getting involved in. Yeah.
Okay. Man, I appreciate that, fellas, man. So cryptocurrency to stock. All right, we jumping into stock now.
Okay.
So, Barney, could you put us on notice about stock and why is stock important, or how are they different from one another?
Okay, well, stock, it was really cool because Alejandro did a good job of explaining it earlier about how cryptocurrency, what it's based on. So with stock, you're basically buying an interest in a company, okay, with your stock. While a bond is you're buying a debt instrument of a company. So a stock is you're investing in that company. You believe in loaded slate, so you work out a deal that you're going to buy in and be a partner in this business.
Right.
Okay? And as his fortunes go, so does your
So,
investment
okay.
fortune go. So I always say stock is really just an equity interest in a particular company. And it's a great part of our economy about being an American, is that you can start from nothing, and with smart buying and selling of stock, you can make a lot of money. However, it is not a beginner's business. You know, it is something that's very, very complicated, and the risk of stocks is that if I put all my money into Amazon, all my money's in Amazon.
Right.
And so those are some of the risks of stock, but like I say, stocks are, of course, I love them, of course, but I also think that they're hedged to a different type of standard than cryptocurrency at this point.
Well, when investing into stock, how do you decide which, company to go with? How do you make that decision?
Well, I have, services that we pay a lot of money for to do research for these individual stocks and nature. But however, remember I told Ben when we were talking at another one of your podcasts.
The last episode.
Yeah, is that basically don't invest in things you don't understand.
Right.
As a person, invest in the things that you believe in,
Mm-hmm.
and then do your research. The amount of information that's accessible to the general public now is amazing. So if you like Coca-Cola and you want to invest in Coca-Cola,
Right.
if you like
Starbucks.
if you see like, wow, that is a great run company, that's probably what you want
Right,
to do
right.
because you understand a little bit, you actually spend your money in it. One of the things I also tell people is that to reduce that risk, go to funds. There are exchange traded funds. There are mutual funds that trade like a stock.
Mm-hmm.
What they're going to do instead, though, is they're going to take a basket of companies in something that you particularly are like. So if you want to do Coca-Cola,
Mm-hmm.
you're going to get an exchange traded fund that invests in a bunch of soda companies. Okay, so it spreads your risk a little.
Right,
bit,
right, okay.
And I always tell everyone, if you're just going to get into investing, exchange traded funds or ETFs are probably going to be the easiest way for you to get in. They have a lot of liquidity. They expand what you're investing in. So I'm going to a lot of times recommend that the average investor invest in an ETF that tracks the S&P 500. You're going to be basically mimicking the performance of the S&P 500 index. Is it exciting? No.
No.
Stocks are exciting.
Yeah.
But an ETF is solid. It's a good way to get an understanding of what stocks are. And once you have some comfort level with the exchange traded fund, then you can graduate and go ahead and start investing in a little.
Hey, some of y'all that's lost, don't worry. I'm right there with you. I ain't got.
Sorry about that. The nerd flag went up right on that one. I apologize.
No, I definitely understand that. But y'all both, Doug as well as Barney, y'all were excited about last week.
Oh yeah.
What happened?
It was fun.
Stealing from the rich, give it to the poor.
So Doug,
No, or stealing from the poor, give it to the rich.
I want Doug to say though, what did you, as you were watching this as a business owner, what were you thinking last week when you were watching the GameStop and the AMC and the market going like crazy?
We talking Robin Hood, y'all.
Yeah. I thought it was just a great time in our history where the little guys were actually got informative and went against the big guys. Whether the reasons are, I don't know.
Right.
And it's not.
It was fun to watch.
It's just sit back and fun to watch.
Right.
And like I said, we learned a lot of new terminology.
Yes.
And again, about short selling and
Short squeeze.
Yeah, the short
Yeah.
squeeze. So that's exciting, and I think it's fun, and I think it's for the retail investor, for the new person who just opened up a Robinhood account or what it is. They got involved.
Right.
Somebody
Yes, they
that
did.
never got
Yes, they
involved
did.
before, and they
Right.
actually jumped into the game.
Yep.
Again, maybe they lost money, maybe they made money, but you know what? You got into the game.
Right.
That's the exciting part. So I like that.
And for those who don't know what happened last week with Robin Hood, could y'all go ahead and elaborate more on that?
You want me, guys? You want to say anything?
You got it, Bernie.
Yeah.
All right. So basically, what happened was short sellers. So when you're short selling, everyone watching this has heard that all week, and they might not know what it is. It's basically you're selling an asset that you don't own. You're borrowing something and selling it at a price, and you're betting that it's going to go down in value. Everyone says that seems counterintuitive, right?
Right.
Like, how does that make sense?
Right.
Well, what you're going to do then is at a certain point, you're going to then basically make good on that borrow. So you might have borrowed 100 shares at a certain price. You're hoping that it goes down, and you're going to fill that order with that. You're going to buy those stocks at that lower price, keep that difference that you made, and then pay that off. Pay that off.
Yeah.
What you have though with a lot of things that we saw this last week were a lot of people who weren't experienced it, so they bought it at the wrong time. They bought it at 200, betting it was going to go down to 100, and GameStop went up to 350. So now they're not making money; they owe extra money to fill that order.
Okay.
So you have a lot of hedge funds that bet big and are closed right now. That are closed for business right now. You have a lot of college kids who are bankrupt
Right,
now.
right.
But the converse of that is you have a lot of college kids who made $1 million.
And that's from just what happened
Yes.
with the whole GameStop AMC thing.
Yes.
Yeah.
A major shareholder in GameStop net worth went up to almost $1 billion because of this.
Wow.
And it all was it was something, and I like what he was saying earlier is that you had a bunch of small, regular people like us unite and act like a hedge fund.
Yeah.
and it threw the markets into a tizzy is the word.
It was democratized profits, which
Yes.
is, I mean, essentially awesome. You're working as a pooled fund, which is, I mean, not unheard of and is often used a lot of the times in hedge funds.
Yep.
And just going into how Robinhood is just like tearing up the market, 56% of Robinhood users on Wednesday, January 27th, held some portion or at least a fraction of GameStop.
Nice.
That's an astounding fact.
That's
Like,
amazing.
that people
I did
on-
not know that. That's
all
amazing.
on the Robinhood app at least held, because they do fractional shares as well, at least held some portion of GameStop's profits.
That's great.
Now, I don't like Robinhood because that's money out of my pocket.
Right.
If you go to Robinhood, you're not paying me
Yeah.
a fee.
Hey,
So,
I use Robinhood.
I don't know if these numbers are true, but they said just with GameStop, 2.1 million users, I mean new users got it, and they got up to like $20 billion.
Stop it.
Yeah.
We have seen the most option volume ever on GameStop this week.
so
Go ahead.
one thing I will tell you about options. So in my business, options are the most complicated thing you're ever going to deal with. So for the average person to just throw in and guess without doing some research, I caution you. I caution you watching this. Options are not for the new. It's like you just learned how to swim yesterday. You do not go surfing in the ocean.
Correct.
You
Yep.
don't. And I'm going to say this in a quick thing is that, yeah, of course I'm saying talk to people like myself who are professional, but at the same time what I'm saying is do your due diligence. It's okay to do options if you're investing in time to learn what they do and what they don't. My compliance department at our firm, if I'm opening a margin account to do options for you, there is so many questions I have to answer about your experience. How long have you been investing? What is your knowledge base as a client before they allow me to do it for you? And that is something where I think last week was great, but it's also a little dangerous because a lot of people see how much money certain people have made, but they rarely tell you the story about the person who lost everything.
Right.
And so that's where I just caution people, go ahead and put your toe in, but don't jump in.
And I don't think y'all telling people to go out and buy stock in GameStop right now, are y'all?
No.
No. I'm just saying with options.
Right.
Playing with options is very dangerous.
And
I just have to make
And
that
selling short is an option.
Right. I think another caution too is, obviously for the new user, the new retail user, obviously, kind of like what Bernie said, this is gambling. It's of some sort. And take for example, if you have a date and she stood you up for dinner and you have an extra $50 in your pocket, go buy some cryptocurrency or some, go
right.
buy,
Found money.
Or if you're planning a vacation, it didn't work out, you have a little extra money, great, invest in it.
Right.
But don't take rent money out. Don't
Right.
take your
Right.
car
Thank
payment
you.
out. Stuff that money that you need, because it's just, I wouldn't say it's fun money, but to some extent,
It has to be, yes.
Yes, it has to
Yeah.
be. So just be careful out there.
Right.
Don't go for the big splurge.
Yeah.
You don't gamble your net worth at a casino.
Exactly.
And
Right.
you,
Yes.
you
Yes.
mitigate that risk by taking out what you can afford to lose.
Yes.
And that's what you do with fun money,
Yeah.
with mitigated risk.
That is a great comparison, though, because what I tell everyone is that if you're going to go to the casino, you should be willing to go in the hole as much as you are willing to lose. So if you're willing to lose 100, you should understand you're going to need 200 to get back out.
Right.
Investing is the same way. So if you're willing to risk $100, understand the fact you're probably going to have to go into the hole 200
To
before you
get it
start
back.
showing
Okay.
a profit.
Right.
And I tell that to all my clients because I want them to know that we might buy something that's a good investment. It might go down immediately because of things that we can't control.
Right.
But the whole thing is fundamentals. What are the fundamentals of the company, of the investment? Eventually it's going to come back up and you're going to make a profit. This is not, I always say this, investing for the average American is a get-rich-slow business.
Yes.
For Bitcoin, for short sellers, it's a get-rich-quick, and we all know how that works out for the majority of people.
Right.
It goes back to the psychology of it all. A lot of times people participate in these get-rich schemes like short selling and like options.
Oh, yeah.
But they get greedy.
Yes.
And that's just intrinsically tied with human nature. I mean,
Yeah.
That's a fantastic
Yeah.
point.
it's sometimes ugly portion, but it's intrinsically intertwined in the human psychology.
That's true.
So if you hit once on 23 black, you're going to continue to try to hit a couple more times on 23
Right.
black.
That is very good. Very good.
But
So-
going back to the whole Robinhood thing, I want to know. So why did the CEO Vlad stop buyers from buying into GameStop or AMC, right?
I'll just real quick on this one. Robinhood, they just were squeezed on money.
Okay.
Because that margin, what I was telling you guys about, that means that Robinhood has to have a source to loan this money so you can buy these stocks that you don't even own.
Okay.
Okay? Robinhood was squeezed on that end. So they got more money from banks, so they were allowed to extend more credit. The reason he stopped trading is because when the board, SEC, stopped trading a couple times during the day in there, for Robinhood, they just are, I can say this, they are almost like a not-for-profit, the way they're set up. So they're making money, don't get me wrong.
Okay.
But the way they were set up, they were just not ready for this volume. The volume of because it's a free platform, everyone signed up.
Right.
And so they were just overwhelmed. It was just too much, too quick. I always, that movie Trading Places with Eddie Murphy and Dan Aykroyd, when they're like, sell, and everyone's running out.
Right.
That was Robin. They was like, oh my God, I can't keep up. They had to stop.
Okay.
And was it bad? Yes, it was a bad.
It looked bad.
It was a bad look.
It looked
was
bad.
a
Bad
look.
optics.
Right.
Yeah, the optics were terrible.
Right, but they weren't the only one. It was
No, they weren't the only one.
Trade as well.
Yeah.
There was a couple.
Schwab.
Yeah.
Okay.
But the NYC's told them, hey, we're stopping trading for a little bit. Like, I mean, there were threats to stopping trade or pulling them off of the board.
Oh
Huh.
wow.
There was so much unexplained volume that they had to get a handle on it. And so you see these Robinhoods and the other ones, the platforms were just, they were dominoes, basically, from this whole activity.
So a lot of people pulled, their stock out because of the things that happened, last week. What are your opinions on that? And I'm a lot of people. I'm saying myself. I took everything out of Robinhood. I was like, nope, you ain't getting me. Nah, I don't know nothing about nothing, so I'm taking it.
Better safe than sorry.
Yeah.
But I don't see, fundamentally, Robinhood is still a solid place.
Yeah.
Okay.
Yes.
Yeah. I kept my money in it. I
Okay.
just, I stayed this, like.
Right.
I kind of like, kind of what you're understanding it, and what they are publicly said. They just didn't have the margin, and they were freaking out.
Yeah, they were squeezed a little tighter than they were comfortable with. Alejandro, what do you think?
I mean, Robinhood ultimately, at one point, only allowed people to sell out of positions and not buy out into positions. So in retrospect, that only allows for the price to go down.
Exactly.
It's market manipulation.
Oh yeah,
Now,
that's on a monstrous level.
Yeah.
Now, granted, the reasoning behind that market manipulation might not have been as evil,
Nefarious
or
as they were. Yeah, you got it. Yep,
as
you're
people
right.
try to make it out to be. But the optics, like we were talking about, of
Bad
you
optics.
only allowing selling is horrible.
Bad optics.
But when it goes down to it, like you were saying, they have these margins, they have this leverage. They have to hold a position from trade date to settle date for 2 days.
Yep.
So they're holding all these for 2 days. Whether the price fluctuates or not, they're filling and killing orders as it comes. So it's in their best interest as a private company to essentially try and make the most money that they can.
Right.
Do I agree with it?
No.
Hell no.
No.
Hell no.
No.
Do I think they're acting in their best interest? Yes. And would I have been in a tough position?
Yeah. Okay.
In
I see what you're
Vlad's
saying
seat?
now. Yeah.
Yes.
Yeah. Okay.
And I would say this: he made the decision to keep his company afloat. And
Right.
I understand, but you know how it is. We all make decisions in real time that sometimes, in retrospect, we're like, ugh. What was I thinking?
Yeah.
Well, you weren't. You were
Right,
panicking. And
right.
sometimes there was a level of panic at Robinhood for about 2-3 days.
Yeah.
Yes, there was.
But I like a Robinhood. I do. I like the whole concept because it allows people who have $15 a week to save a place to save it.
Right.
Great,
And I think that is the most underserved part of our entire economy is the person who wants to invest, but they don't have $100,000 to invest. They have $100 to invest. Robinhood gives them a place to invest,
And
I
Robinhood,
like that.
Robinhood disrupted the entire market of your own discretionary investment decisions because Robinhood was the first in market to offer a no cost trading fee, which pushed TV
everybody.
pushed
Yeah.
Charles
Yeah.
Schwab
Yeah.
Of all men, they all went, yeah.
to cut their costs.
Yeah.
Now, what I want to get into is how they are making money, though, which is something that might not be known by everybody, but I don't know if I completely agree with. So what they do is they'll allow you to trade.
I'm so glad you went.
Yeah, right.
Yeah, I was going to ask this question. I wanted to know.
So they allow you to trade for free, but the cost that they charge comes from selling those orders to bigger banks. Citadel is a huge proponent of this. They sell all the orders from the day in and day out of retail investors or whoever else is on Robinhood to these bigger banks to, front run, to do whatever they want with that data. Is that in a digital age where our data is being tossed all over the place, is that one thing that we need to start pulling back on?
That's what I'm saying.
They are going to. I'm gonna tell you this right now. This last week is going to result in a number of changes, and because what happened, just like that movie, The Big Short.
Yep.
Everyone's seen that. What those guys did was they found an inefficiency in a process, and they manipulated it for huge profits. This is what just happened. These Reddit users found a way to join together and manipulate the market like a hedge fund does.
Right.
Sometimes. And that, like you said, democratized the whole thing. Like these now, you have a bunch of people who learn like, oh, actually my voice does matter, even if I only have that $100.
Right.
But if I put 100,000 other people who are also putting in $100, we actually have a voice. So I think it was really exciting. But Robinhood, they make their money by letting it, like you were saying, by letting other people fill the orders, by letting other people have the data. It's just like Facebook. How does Facebook make it work? By selling the information that they compile. Right. Robinhood's no different. They have to make money somehow.
Huh.
Yeah.
So we are the product.
Yeah.
Yes. We are.
And to sum it up,
Yes.
yes.
Way to put it, man. That's spot on, buddy. I like that.
So other than Robinhood, though, what other apps would you recommend to people? Because, like I said, I took my money out of Robinhood. What are some apps that you guys would recommend that we do use? You know, not saying that Robinhood is bad, because now getting an understanding of things, I get why they did things that they did.
Yes.
So what other apps would you guys recommend?
So I personally am on Charles Schwab.
Yep.
So I have an account there.
Charles
Schwab,
Yeah, okay.
E-Trade, the major names that you've all heard before, TD Ameritrade.
Okay.
They all have solid platforms. You know, nothing wrong with that. And they have no trades. A lot of them, because of Robinhood, have no minimums anymore. You can start an account with anything.
All right.
So I think it's, sorry to take your thunder, Alejandro, that's what I think it is. Go ahead, sorry.
Yeah, no, I completely agree with that. Now, what the question goes into now, as an industry that Robinhood has pushed that no-cost trade, as an industry, they're all doing this. Pay for order flow now. So you got to kind of weigh, do you want to pay up front and say like, hey, and who knows if the still pay for trades platforms are selling data or not. Who knows? But the no cost trades are definitely selling the data to the bigger banks and allowing them to do what they want.
You said front running, which is a great way to put it. That information allows them to make and anticipate market moves.
Yep.
So I don't know if that's right either. We're gonna have to.
Right.
I think a lot of people with a lot bigger brains than me are gonna have to figure that one out. But man, what just happened in the last week shows that there are some inefficiencies in our market right now that smart people are gonna figure out how to manipulate.
Definitely. I mean, that's how you make money in the stock market, is inefficiencies.
Yes, indeed.
You in an efficient market where a buyer gets matched with a seller at a perfect price, that's when the market's perfect. A perfectly competitive market, though, is always going to have inefficiencies. There's always going to be a matcher. I mean, at its root, that's all that it is the stock market being matched with a buyer and a seller. And how frequent that transacts is what dictates prices, is what dictates the volume, is what dictates, everything going on in the overall market.
And that's what I tell clients all the time. You pay us a fee to find these inefficiencies and then exploit them to your advantage.
Right.
That is it's a cold truth. So.
Yeah. And I think another tone with your listeners is, let's say you make a profit. You got dividends coming out. There's cost at the end of it that you don't see. You see, but you don't see. Where it's your capital gains on that. You have to pay for that.
Okay.
And if you use TurboTax or your accountant, your fee went up for TurboTax because you have to file another form as well. I know my accountant, charges me more because, I made some money in investments. So
Right, okay,
again, these are just
yeah.
costs that occur, even though you made some money, you got to think about that as well.
Right.
So, which is not bad, but I'm just saying that it's out there.
Yeah, so what we're saying is like, hey, it's better to have a tax problem than a money problem.
Exactly. right.
Okay. Hey man, this was a dope episode to set the bar. Man, I'm honored and I'm excited to have you guys here, and I appreciate you for all your knowledge that y'all dropped on us today, man.
Thank you.
Episode,
Thank you.
oh yeah, most definitely. Make sure y'all check out my boy podcast. Go ahead and put him on notice once more.
The Economics of Everything. We're on LinkedIn and Facebook at The Economics of Everything. We're on online, econofeverything.com, and we're on email at theeconofeverything@gmail.com.
All right, y'all. There
That's
y'all
the
have
one.
it, man.
Check
Make
it
sure
out.
y'all
Check it
subscribe,
out.
man.
Thanks, guys.
And y'all already know it's the boy, Mr. Watch It What? Watch It Tone, Mr. B, Alejandro. And y'all already know Doug.
Hey, and one thing I was going to add to real quick, Doug. I know you do a lot of investing. You do a lot of, you're in business.
Right.
You're paying taxes all the time.
Right.
When you are worried about paying taxes, when tax time comes for you, are you more concerned about how your investment taxes are going to affect you, or because you can't write off anything with your investment stuff? Like with your business, you can find sometimes ways to write things off because you had to put in a new boiler, whatever.
Right.
You can do that. With your investments, what is your concern as a boots on the streets investor? What is your biggest concern with investment taxes, profits, things like that? What do you worry about when the market's going really good?
Obviously my tax burden, but again, it's a good problem to have.
Yes.
It's like I made money.
Okay.
It's like, and it's a little bit of research, maybe it's a lot of research. But again, if I have like a high tax, like I said, I don't know what capital gains tax is right now. If it's like 18 or something like that.
But
It's
tax problem's better than a money problem,
exactly.
right?
That's kind of, I think you explained it really well. So I mean, it's like, you're upset, but you're not. So I was just
Right.
like,
I got you.
By the way, shout out to Loaded Slate.
You already
Yeah.
know. And normally we toast, but my drink is
I'll tell you
gone.
guys, my whiskey's
And normally, you guys, we always have the food, whatever the special is of the day right here. Well, we ate it before we started. So
It was that good.
Yeah, there's nothing I can do
But
about
here's a
that.
shout out to Lotus Slate. Thank you guys once again for putting us on notice. Till next time, right here on Set the Bar.
All right, thank you.
Thank you.